Even if you have low expenses as an owner-operator, you still can't afford to run cheap freight. The main reason is there's really no such thing as a truck that has low expenses. Most of us as drivers, when we're figuring out what it costs us to operate our truck, what we need to make per mile for being out on the road in our truck, we figure out basic expenses. On the business side, we'll figure in our fuel, we'll figure in all of our overhead, we'll figure in the cost of maintenance on the truck, and we'll also figure up the cost of repairs, the big stuff that we don't always see coming up. Most of us will factor those things in on the business side, and on the personal side, we'll factor in our expenses at home. We'll factor in what we need to bring in at the house. We'll look at the mortgage, the car payment, the credit card bills, all of that stuff, and we'll come up with a figure that we need to be making on the personal side to cover everything, and we'll come up with a figure that we need to be making on the business side. And then we'll look at how many miles we're going to run per year. Let's just say it's 100,000 miles, and then we're able to run the numbers and figure out how much we need to be making per mile in order to cover all of our needs on the business side and on the personal side. That's what basing your cost of operation on your expenses / what you need looks like. But the true cost of operating your truck involves more than just taking care of your basic needs. It involves more than just taking care of your basic expenses. And it involves more than just taking care of your current expenses. For example, the true cost of operating a truck involves a truck payment whether you have one or not. So if an individual feels that they can afford to haul freight for cheaper just because they don't have a truck payment, then that means that you're not accounting for a truck payment in your cost of operation, simply because you don't currently have one. But technically speaking, you always have a truck payment. In other words, even after you pay off your truck, you should still be factoring in a truck payment to your cost of operation, because you're going to eventually need another truck. If you're paying $1,500 a month on your truck and you pay it off and you continue to save that money in, we'll call it a truck replacement fund, in 2 years, you've allotted in your base cost of operations $36,000 towards the purchase of another truck, which is absolutely at one point or another gonna be a necessary business expense. And I might add that that's something that you don't want your business to be caught not being prepared for. So no, your truck payment does not go away just because you pay it off. In your mind, the expense should still be there. It's the same thing for driver pay. Many drivers, when they're factoring in their cost of operating, because they're driving their own truck, they don't factor in what a driver should be making. Sure, when they're figuring up their cost of operation, they will factor in their personal expenses, but that's not the same as actually asking yourself, what should a driver driving a truck, in this case, we'll say again 100,000 miles a year, earn? In my opinion, that is the figure that should be accounted for and allotted for if you're trying to figure out the average true cost of operating a truck. Owner pay is also something that truck drivers, that owner operators tend to leave out when they are figuring up the cost of operating their truck. Again, sure, they will estimate what their personal expenses are, but again, they don't necessarily look at what a driver should be earning for doing the job that they're doing, and they definitely don't look at what the owner of the truck should be earning aside from what he's paying a driver to drive the truck. As the owner operator, there is me, the owner, and there is also me, the operator. And if I don't account financially for both of those entities separate from each other, when I'm figuring out what it costs me to operate a truck, I won't be aware of that when I'm trying to figure out what rate my truck needs to earn per mile. When an owner operator does not factor in driver pay separate from owner pay into the rate that he feels like he needs to be earning with his truck, then the result is he ends up feeling like a slave to his own truck. A real truck owner also needs to factor in profit, aside from the owner pay and aside from the driver pay, and also aside from the maintenance account that may be getting big if the truck isn't breaking down. The question to answer is, do you want profit to be left over after you account for all of those things? I would think that the answer is yes. It may not be. Some people don't want profit left in their business because they don't want to have to pay taxes on it. But I know that there's a lot of us that are willing to pay the taxes on the profit. In other words, we do want money to be left over in our business after we take our driver pay and handle all our personal affairs, after we take our owner pay, which is benefit for owning a business, and after we handle all overhead involved with operating the truck. And of course, if you're going to have profit left over, that means you got to allot for taxes. A good general rule of thumb, if you're filing taxes as a LLC or as a sole proprietor, you're going to pay 30% of your net profits to to Uncle Sam. For example, we've been talking 100,000 miles this whole video. You ran 100,000 miles last year. Your truck did $2.50 a mile, all miles, so it grossed $250,000. For the sake of keeping it simple, let's just say 50% of your gross profit went back into your business, which means you're going to be left with $125,000 taxable income. Now, of course, you're going to get child credits and you get a basic living write-off. Sure, you get all of that stuff, but just to keep it simple, 30% of $125,000 means $37,500 of that net profit should be accounted for taxes. And again, if you don't account for it, it probably won't be there. These things are the true cost of operating a truck. And if you're not factoring in all of that to what you expect to get per mile, then it's likely that the money's not going to be there for those things. You should never base your cost of operation off of your expenses, off of what you need. You should only base your cost of operations off of the average cost to operate. Drivers basing their expected rate per mile on their expenses / what they need, in my opinion, is dangerous. And it is probably one of the main reasons why you hear drivers talking so much about rates fluctuating, and you hear drivers talking so much about other drivers hauling cheap freight. That can only be because a driver is not factoring in what it actually costs to operate a truck. They're looking at their expenses, they're not factoring in a driver pay, they're leaving off a truck payment because they don't have one, and in their mind, these things mean that they can afford to run freight for cheaper. This is also kind of what causes a driver to be okay with running a backhaul for less, because technically speaking, the backhaul doesn't have any expense with it. I mean, the driver had to get home anyway, so if they can take something back on the way, technically speaking, it doesn't matter what it pays. So family, again, you hear a lot about drivers going off on other drivers about you shouldn't haul cheap freight, you shouldn't haul cheap freight, but if drivers don't understand the importance of still factoring in things like driver pay and a truck payment, even if they don't have them, then rates will continue to be all over the place because drivers will be basing what they need to earn in their truck on their expenses. But if drivers understand what I said at the top of this video, that technically speaking, there is no truck that has low expenses. A driver has to get paid, taxes have to be accounted for, profit needs to be left, the owner of the truck should earn money, maintenance needs to be done, repairs have to be done, fuel has to be put back in the truck. All of that's the same. You can't change that. If you try to, you're only going to end up short in one of those categories. You can't not factor in all that is involved with operating a truck. And then when the check comes in, when the money comes in, look at it and say, this is not enough to operate a truck. Okay? You got to factor in everything when you're looking at estimating your true cost of operation.